Welcome back to Wealth Dynasty. Glad to have you today. Today we got a great episode. We're going to be talking about how to grow your wealth, how the wealthy have made their fortunes, and how families can preserve those fortunes through generations. This is not Instagram advice. This is not, get rich quick schemes or ideas. And this is also not a 10 little hacks to get your side hustle going. This is actual data that we've brought together from Credit Suisse and Forbes and multiple other sources on the top 5% global population, how they've got their wealth, how they've grown it over their lifetimes, and how you can do the same. So without further ado, Kurt, welcome back.
Hey, thank you, Mark. Good to be here. Thanks for joining us today on Wealth Dynasty. Appreciate it. So Mark, what do we have in mind here?
So yeah, let's talk about the top 5%. I guess the first question is, who is that?
Okay.
And what is their strategy? What have they done to amass that wealth? I know you've worked with, the top 5% through your entire career, and people that are not part of there that want to get there. So let's say, you're either there or you're not there. How can our viewers reach that top 5% and go up,
So I would say, having met with hundreds of financial advisors and their clients over the past 20 years, I've personally noticed that the people that mostly I meet with are either people that have been corporate executives at some level and have substantial equity, people that have their own businesses. That's been the biggest group. The other group is folks with inheritance. Okay. We're not going to talk too much about that because that's just something that happens.
Yeah, that's not everybody, but
not everybody's. Okay, there's a few people. And what was the other one we talked about just a few minutes ago?
Real estate.
Real estate. Okay, real estate's how people make money. Lots of people make money in real estate. So as Mark alluded to, this is not get rich quick. All these people that I've met with, they all worked hard. So and they sacrificed a lot to get to that level. I remember, on the real estate side, I remember one client I met with many years ago, before the real estate boom, the big boom back in early 2000s. He had started in college buying a house, making the sacrifice to, just get a home and start equity. He got that home, and then he was able to buy a couple more over time. So over a period of time, he had 20 or 30 properties he was managing. Now, I promise you, he was working hard.
Yeah.
Okay. It's a lot. Those are all residential properties. That's hard work. Okay. Getting those things fixed, knowing who to call to get things fixed, making sure they collect the rent. It's a lot of work.
Yeah, that's
a lot of work. But, the good news is that having done that, he had a steady stream of income that was going to keep coming in no matter what. Now, obviously, if he stopped working at it, that income stream would diminish.
Correct.
And there's plenty of headaches that go along with that. But he did build a lot of wealth. And you build wealth not because of the income stream. The income stream keeps you going, paying the bills, okay?
Yeah, buying more property, you reinvest it.
Right. The wealth is in the growth in the real estate value, okay? That's where the wealth is. And also the big tax benefits, because when you own real estate and rental properties, you can depreciate that property, which reduces tax burden on the income. Yes. And so you've got depreciation, which helps you on the tax side. You've got an increase in the value of the real estate. Plus you've got rental income, which typically increases over time.
Correct.
So all those things are fantastic, great stuff, takes work. So anybody that says it doesn't take work is crazy, okay? They're not correct.
Yes, they have not done it.
Yeah, they've not done it. And we had the one gentleman, Mr. Bogus, who was a commercial real estate investor. He had done very well with that. He was also a corporate executive. So most of his initial wealth came from being a corporate executive. And then he was able to take that income and channel it into commercial real estate, which then gave a perpetuation of the wealth and the income, which was able to pass that on down for generations. Okay, so that was a big win. So very smart man and able to do great things. But I've seen that a lot. I've met with folks that have over $500 million in real estate. Some people, of course, that I haven't met with have billions. Okay, but I met with people with, well over $500 million of real estate. They're very focused. They are paying attention all the time to leveraging the property, getting the best deals on the leveraging, the rental, the maintenance, all those things. And it takes, and some people with that kind of level of properties, of course, it takes an office, it takes employees, it takes a lot of people to make that work. Okay, and a lot of focus to it. Okay, so nobody should ever think it's going to be easy street.
That's correct, and that's with any business. And so going back a little bit, Ryan, a little bit, I guess the top 5% from all the data in the world, the top 5% is by technical definition defined as globally as over $1 million in net worth. That's very attainable. Like if you really think about
in the U.S., that's very attainable.
Very attainable in the United States, and honestly, in most countries, like you can get there. You can get there. I know if you find the right business or whatever it is that is your passion and you can make money with it, you can get there if you work at it and have the discipline. So
yeah, we've had the good fortune to work with many high net worth global citizens and they're almost all business owners.
Yeah.
They're in some sort of business, whether it's manufacturing or whatever it might be. Yeah, lots of businesses. So the other idea, of course, is business ownership, which we see that here in the United States tremendously. And so it's not just big business, lots of small business owners, lots of folks in the trades that do very well.
Yeah.
They're, it could be plumbers, it could be electricians. These folks own a business, they build it up, run it for many years or sell it and make a profit, and then they're able to, retire. But nobody should ever think that's not hard work.
Truly, yeah. I mean, you have to learn your craft, and lots of times, especially like I've got a lot of friends that started HVAC or plumbing businesses, and they spend as much time learning the business as a doctor learns to become a doctor. It's the schooling that you have to go through, and then they start on their own, and they're in the trenches. One of my really good friends from back in the day, he started an excavation company. I mean, he's like literally started with a shovel and a pickup truck, and then he was able to buy a skid steer, and then slowly build. And and anytime he had a big job, he'd rent out, and so he'd rent, a backhoes or whatever he needed to be able to finish the job, and then was eventually able to get his own equipment. And he's got a massive, multi-million-dollar operation now. And it's just, it's a long process and a lot of dedication to whatever you choose, whatever your business is, whether that's a YouTube influencer or a crypto investor or whatever it is, or becoming a doctor and get your own practice, whatever your business is, you really got to dedicate hours and time, and you really got to be focused on it, and you have to keep up your learning, because if not, you get passed up.
Yeah. So just talk about the medical profession. That's kind of an interesting. I've done a lot of work with doctors over the years, and typically doctors become affluent. They're not always wealthy. Lots of times they're not wealthy.
Explain a little bit about that.
A lot of them spend a lot of money.
Spend a lot of money. Keep up a lifestyle.
They keep up a lifestyle. They don't make the sacrifices necessary to actually accumulate a lot of wealth. Okay. Or they have no business savvy. They're great doctors. Fantastic. We need great doctors. But they don't have the business savvy to do things other than just practice medicine.
So what would you say?
That, by the way, that applies to all
things, yeah, because things. That's what I was thinking, yeah.
Because you talked about your friend who was in the excavation business. Well, hey, a lot of people can be excavators. Yeah. They can work a backhoe. Not everybody can build a business.
Correct. Yeah, he had got a business partner, and then he got an accounting department because he knew nothing about payroll, and then they slowly built this out with professionals that knew what he didn't know.
Right.
So,
yeah, super important. And all these things, in my experience, what I've seen is it takes risk. People take a risk. Okay, and work like crazy to make it happen. That's what happens.
So let's say you're stuck in a job, maybe it's a high-paying job. How can you go from being an employee into business ownership, take that risk, and how's the best way to mitigate that risk, I guess?
Well, I think faith in yourself is huge. Okay, you've got to be confident that you can get it done. That's super important.
Yeah.
But you need to learn your craft really well, whatever that might be, and understand the ins and outs of your craft and be able to understand business ideas. So be able to create the business, to be able to have in mind you're going to sell it someday, and then build it up so it's a point where it's sellable.
Lots of times, if you have a great idea and you're ready to run with it, then like go in with it. If you're kind of on the fence with something, I have another friend that started, he likes guns, and so he was making holsters for all of his guns. He learned how to make his own holsters out of Kydex and all these different materials. And then he's like, why don't I just start a holster company? And he did this in his garage for like 10 years before he got big enough that income was able to replace his job income, and he was able to build it out even bigger and get an office and get a factory and stuff. So there's a lot of ways to do this.
It all takes sacrifice. It takes sacrifice. You can sacrifice your time, stuff that you'd rather do.
Yeah.
But you got to have a passion for it.
Have to have a passion for it. Yeah. That's good. What about, let's see, we've talked about business ownership. That's the majority of people globally and in the United States. And we talked about real estate. That's probably 15 to 20% of the people to build their wealth. What are some of those top ways?
The corporate executives. I mean, that, building your own business doesn't necessarily require you have an MBA or anything, or a degree in finance. You don't have to have that. Okay. It's not required, but it helps mostly. Okay. If you're in corporate leadership, that does require higher education for the most part. Most people that get to that level have done so with a strong educational background. Okay. But I've seen, many people who have retired that have 20, 30, $50 million from being corporate executives. And they've gotten equity in the company as part of their bonus package. And they've been able to transfer that into wealth.
Okay, that's incredible. Yeah.
That also requires huge amounts of work, by the way.
Yeah.
Okay. In other words, they're working at those jobs 80, 100 hours a week.
Yeah, that's a lot of
Typically.
sacrifice.
Okay. They put a lot of time in.
So corporate executives, nice corporate packages, golden handcuffs, maybe, as they say, like, the companies give you these great packages so that you stay there and have longevity with the company.
These are very impressive people, by the way. Some of these folks I've met, they're very impressive, super smart, with vision and understanding, and they understand people, they understand money, they understand how to make things work.
Yeah, how to grow a business that they may not have started, but they know how to make it, stronger and stuff. That's good.
Well, I'll say this also about doctors. So doctors and medical professionals good at their craft, but there are some physicians that do expand their businesses substantially. They create a business along with the medical practice, and they become wealthy. Yeah. Okay. But it typically takes that to go beyond the practice.
That's good. And a lot of times what I've seen also, it kind of ties in with both, like, the real estate and the business ownership, is where they'll buy the office or the office space or multiple doctor office space, and then they sub-rent those out to doctors or stuff like that. So, that's with any business. Like, if you have the opportunity to get big enough to buy your own office space, it's far better than, because that's part of your business.
You got to be able to be comfortable with leverage. You got to use other people's money from the bank and other investors and be comfortable with that. So you got to, you can't give up.
Yeah.
You got to stick with it.
That's good.
Yeah. So that's really, honestly, that's probably the main way people acquire wealth these days. And, some people can do it through multi-level marketing too. They become quite wealthy, but those are people that have, really dedicated themselves to that, and you put in the time and made the sacrifice.
It's a business. Yeah. Whether, whatever that may be.
Yeah. So the great thing is that there's all sorts of things available to anybody if they want to take the risk and do the dedication of the time.
Yeah.
Yeah.
And then as far as like investors, and that does represent, people that invest, that is about 10 to 15% of the top wealthy people. In fact, I have a really good friend, his mother is, she just invests. That's what she does. And they inherited some money, but she does really well with what she's inherited. And she's actively managing that and really built that out significantly, more than what she inherited. Well,
certainly our people have jobs. They start investing. They start small, but they continue to invest. They don't spend their money on other stuff. They invest.
Yeah.
And are willing to keep their lifestyles modest, but they're investing. In fact, there are people in this country who have built incredible wealth just doing that.
Yeah.
and continuing to buy, basic stocks. They may learn about 10 different stocks that they really follow really well, and they pay attention to those. They buy it when it's low, and they just continue to keep buying and reinvest the dividends. And they're not doing anything amazing, just basic investing.
Yeah. Vanilla.
Right. And you can do that. Yeah, but you got to put in the effort.
That's it.
And really, those are people that they'll just focus on maybe not even 10, maybe 5 or 6 or 2 or 3. It doesn't take a lot. You just focus and pay attention. And when it goes up, maybe you sell a little bit. When it comes down, you buy some more. Okay, and you follow certain stocks. You kind of get an idea of how they flow. And it's not perfect. You're not timing it perfectly, but
Give you a little bit more than just a dollar cost averaging.
right, yeah. So there's lots of smart investors that do that.
That's great. Yeah, I know my mom does that with. She had 2 or 3 that she's like, oh, I was able to scoop up a little bit more Micron this week. I'm like, oh, that's one of her little favorites. So yeah, it's done good for her.
So that's another great way to build wealth. Typically, the funny thing you find is people don't spend their money.
Yeah.
They build the wealth, they don't spend the money.
Tell me about that a little bit more. Yeah. So they kind of take the consumer chip out of their brain.
Yeah.
How has that really affected some of the most wealthy people that you've seen?
Well, some of them, a few of them, are frugal. Quite frankly, they're frugal, and so they're focused on their investing. They're focused on their business. They're not spending money on
Anything else, or mostly anything else. Yeah. And there's a time and a place to get there once you feel like you've done it.
Well, some people have no need for that. They don't feel the need.
They don't feel the need to feel, like I'm going to treat myself now.
Yeah, they don't feel the need. They're focused.
Yeah, that's nice.
Yeah. So everybody gets to choose their own way, right?
Mm-hmm.
Yeah.
Yeah. One thing, and this is kind of like a little last thing, we for our global citizens. So when I lived in South America, one of the things that I found, and I had a lot of conversations with, very wealthy people as I lived there, and lots of people. What I would tell them, anybody that wanted some good advice, you just have to duplicate something that's successful in another country. So like if, let's say here in the United States, Uber has been a great service, or a drive-through pharmacy, like we have things that we just take for granted because we've been driving through the auto service at the pharmacy since the 90s or whatever, and that's normal to us, but that may not exist in your country. And you set the first one up, or you set the first, automatic car wash up, because, that's something that doesn't exist where you're at. You will become wealthy because it's a proven method. We already have the systems in place. You just have to duplicate a business that's been successful in another country. That's another great way that our global citizens, if they're not there yet, this is an idea for you guys. So,
well, this has been a great discussion. Thank you, Mark. Lots of ways to become wealthy. I'm going to just reiterate that's not an easy situation.
yeah.
I mean, some people win the lottery. Half the people who win the lottery end up in disasters. Okay. And worse off than they were before. Okay. So that's not really a great path to wealth. Truthfully, working for it creates value.
What's your top tip, I guess? What would you be your advice for your grandkids?
I think they should start investing in real estate. Focus on just buying a simple property, learning how to maintain it, and then building from there.
That's good. My top thing, I guess I'd say, is live below your means. That's my top. Like, even when you're making it or you're doing very well, just try to keep yourself until you get to a point where you feel, if you ever get to the point that you feel like you want to splurge now, just that discipline is super important. I've seen people squander money so fast when they get a pay raise, and now they have to make, they want to buy something new because of the pay raise or whatever. If but building wealth it's a lot of discipline.
It does. It's you have to delay gratification.
Delay gratification, truly. So awesome. Yeah, and then hard work. That's huge. Hard work. So learn your craft, work hard at it.
And self-confidence. They're super important.
Yeah.
Yeah.
Yep. Awesome. Well, thanks again. That was good stuff.
Okay. Thank you, Mark.
Yep. We'll be back next week.
All right.